Hey there, welcome to my channel. Today I'm going to be sharing with you one of my passive income streams that generates around $25,000 per year. I've been building this up over the past several years and it's become a really reliable source of monthly income for me. I'm excited to dive in and show you exactly how I set this up and how it works. The passive income stream I want to focus on today is investing in dividend-paying stocks. Now, I know investing in the stock market can seem intimidating, especially if you're new to it. But I'm going to break down exactly how I've been able to generate around $25,000 a year in mostly passive income from my dividend stock portfolio. The key is to focus on investing in high-quality, established companies that have long track records of paying reliable and growing dividends. Dividends are essentially payments that publicly traded companies make to their shareholders. And when you own shares of a company that pays dividends, you get to collect those dividend payments. Now, the beauty of this approach is that once you build up your portfolio of dividend stocks, you can generate a fairly consistent stream of monthly or quarterly income without having to do a ton of active work. Of course, there's some initial legwork up front to research and select the right companies to invest in. But after that, it's mostly just a matter of letting your portfolio do its thing and collecting those dividends. The specific strategy I use is to build a diversified portfolio of around 20-30 different dividend-paying stocks. I focus on companies that have 1. A long history of paying and increasing their dividends over time. Ideally, I look for companies that have raised their dividends for at least 10 consecutive years. 2. Strong competitive positions in their industries and the ability to weather economic downturns. These are often large, established companies with dominant market shares. 3. Reasonable valuation metrics, like a price-to-earnings ratio that's in line with the company's historical average and the broader market. Some examples of the types of companies I've invested in include major consumer staples brands like Procter & Gamble, Coca-Cola, and Walmart. I've also got positions in large tech companies like Microsoft and Apple, as well as industrial giants like 3M and Caterpillar. The key is to build a portfolio that's diversified across different sectors and industries so that you're not overly exposed to any one area of the market. That helps smooth out the ups and downs and provides more consistent returns over time. In terms of the actual investment process, I typically deploy new capital into my dividend stock portfolio on a monthly basis. I set aside a certain amount of money each month, whether that's $1,000 or $5,000 or whatever works for my budget. And then I scour the market, do my research, and strategically add to my existing positions or initiate new ones that fit my criteria. The research process involves looking at factors like the company's dividend history, payout ratio, free cash flow, balance sheet strength, growth prospects, and valuation. I also consider things like the industry outlook and competitive landscape. It takes some time to get comfortable with this type of research, but there are plenty of great online resources and tools that can help. Once I've identified a company I want to invest in, I'll typically start with a small position, maybe $5,000 or $10,000 worth of shares. And then I'll continue to add to that position over time as I gain more conviction. The goal is to build up a meaningful stake in each of the companies I invest in, so that the dividend income starts to really move the needle. Discuss the dividend reinvestment and income. Now, one of the key things I do to maximize the power of my dividend income is to automatically reinvest those dividends back into more shares of the same companies. This is called a dividend reinvestment plan, or DRIP for short. By reinvesting my dividends, I'm able to buy more shares, which then generate even more dividends, which I can then reinvest, and so on. It's a beautiful compounding effect that really allows my portfolio to grow over time. So, to give you a concrete example, let's say I own 100 shares of a company that pays a $2 quarterly dividend. That means I'd be getting $200 in dividend payments every 3 months. If I reinvest that $200 back into buying more shares of the same company, I'd now own 102 shares. The next quarter, I'd get $204 in dividends, and so on. Over time, this compounding effect can be really powerful. And that's a big part of how I've been able to generate around $25,000 a year in mostly passive dividend income. Now, the other key factor that has allowed me to grow my dividend income to that level is simply the gradual growth of my overall investment portfolio over time. When I first started investing in dividend stocks several years ago, I didn't have a huge amount of capital to work with. But I was diligent about consistently adding new money to my portfolio on a monthly basis. And as my portfolio has grown in size, the dividends it generates have also steadily increased. So it's been this virtuous cycle where the more I invest, the more dividends I receive, which then allows me to invest even more. And that compounds over time. To give you a sense of the numbers, when I started out, my dividend stock portfolio was maybe $50,000 or $60,000. And that was generating a few $1,000s in annual dividend income. But over the years, I've been able to steadily grow that portfolio to around $500,000. And with an average dividend yield of around 5% across my holdings, that's now generating close to $25,000 per year in mostly passive income. Of course, investing in the stock market does come with its fair share of risks and considerations. Dividend stocks can be volatile, just like the overall market. And there's always the potential for a company to cut or even eliminate its dividend if the business environment becomes challenging. So it's important to do your due diligence, stay diversified, and not get overly exposed to any one position or sector. I also always recommend having a long-term time horizon when it comes to investing in dividend stocks. This is not a get-rich-quick scheme. It's more about steadily building wealth over time through consistent investment and reinvestment of dividends. Additionally, there are some tax considerations to keep in mind. Dividend income is generally taxed at a lower rate than ordinary income, which is a nice perk. But you do still have to pay taxes on those dividends, whether you reinvest them or not. So it's important to factor that into your overall financial planning. Alright, well, that covers the key details of how I've been able to generate around $25,000 per year in mostly passive dividend income. I hope this has given you a good overview of the strategy and the thought process behind it. Investing in dividend stocks is certainly not the only way to build passive income, but it's a strategy that's worked really well for me. And I think it's a great option to consider, especially if you're looking to create a reliable, long-term income stream. If this sounds like something you'd be interested in exploring further, I'd encourage you to do some additional research, start small, and continue building and diversifying your portfolio over time. Feel free to let me know if you have any other questions. I'm always happy to share more of what I've learned. Thanks so much for watching, and I'll catch you in the next one.